all the crap off the charts here, and we are going to zoom on in a wee bit here, make it full screen, and here we go. Tezos has moved towards the top side, and thank goodness that it did. Isn't that right, XTZ fans out there? What do you call yourselves these days, my friends? Tezonians? I don't know. There's quite a lot of names going around. I always liked Tezonians and Tez heads. Anyway, it's a good thing that it did, because if it hadn't, then what we would have been looking at here would have been the cross between the 50 simple period moving average and the 200 simple period moving average on the 6 hour time frame. Wow, the 6 hour time frame, Rocky. You don't usually look at that. Why are you looking at that today? Well, you're going to find out in just a second after these intro clips. Woo! And we're back in the charts. Look at that. Wait a minute. There's a bit of news. Just seeing that somebody says that Crypto had his channel deleted. I'm going to have to look at that after this. That's shocking. Anyway, thanks for seeing me here, and hit that like and subscribe button. Hopefully we don't get our channel deleted. That would be awful, wouldn't it? Now, I'm not a financial advisor, none of this financial advice. Probably a good point to point that out, actually, now that we're talking about this. But anyway, looking at this, if we had kept going down, there would have been a crossover there. Now, there wasn't. That's cool. That was kind of just to kind of draw your attention to the fact that we're actually quite a bit above these two moving averages at the minute, and that's nice to see. But the thing that I really wanted to point out with regards to the 6 hour time frame is where the parabolic SAR is actually sitting at. That's in there at 375. 375 would be a key area if we saw the prices pushing on past that for me to want to potentially kind of ditch the long that I was holding at that time with a view to thinking about perhaps getting a better entry or whatever, you know, various permutations of that thing in and around about those prices. Now, why am I talking about it? Why am I talking about the 6 hour time frame? Let me put this into context real quick. Jumping down towards the 4 hour time frame, we can see that the parabolic SDR comes in at this price point over here at $4.14. And what does that line up with? Well, it lines up at the lower end of a potential wedge that could be operating on the charts for us in and around that zone. We could easily come in here and simply then turn around from that price point. But as well, looking on beyond it, we have a couple of moving averages. Now, I tend to look more closely at the 4 hour than the 6 hour with regards to looking at these crosses of the 50 and the 200 simple. But if we did come down to that zone, you're seeing that 395 down towards 380 is where both of these are. Taking out that 6 hour parabolic SDR is going to be taking out both of these moving averages here on the 4 hour time frame. Now, on the 24 hour time frame, as you can see, there was a golden cross back a ways ago here. What did we see subsequent to that? A retest of the 50 simple moving average. Lovely to see, and things continuing up the way. Now, what we want is for that wedge to break towards the top side, and if it does, it actually takes us in line for a 540 measured move. I can show you that real quick, maybe. Just grab this real quick. Yep, boom, 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 double top, twin peak pattern potential. Could see something happen. Would be nice to see a cup with handle. By the way, I'm going to look at a big cup with handle in a second here as well, or look for one anyway. But if we were to move down past that 375 area, then we're looking down to two things thereafter. Well, you know, of course, first off, the tiny little bit of inflection that we had here, this sort of almost not quite fair to say, but maybe that was our previous low area. But really, our previous low is in this zone down at the low $3, and it's not worth carrying that 20% loss on down to get down, or the 10 to 20 15 to 20% loss that you'd be looking at in order to kind of get down there. And that's what I was talking about how I would be managing my positions. But then, of course, as well, on this time frame, you can see that the parabolic SDRs are all the way down here at 291. And, you know, going down to these areas would be, so long as we stay above the 200 simple here in the 24-hour time frame, we're doing good. I don't want to see this happen, though, at all. At all. That would be really... That'd be really, really awful. Anyway, if we did come up towards this high, then, you know, twin peak pattern could happen, double top, whatever. What people love to talk about is, of course, the what do you call it, cup with handle. So if we came up to that point, where would we descend down to? I'd be looking then at a 50% retrace from that area. That kind of brings us back down to where the current prices are at the minute. So before I actually, you know, I'm not going to speculate about a cup with handle that hasn't happened yet with a twin peak here, but I am going to point out just real quick for you that there's this potential if we were to withdraw down the way from the if I could speak first, then secondly, if we were to withdraw down the way in terms of our prices, what would this be? What would this one green line I just drew in represent? That would be, of course, a bump and run pattern. Go and check out Bulkowski's book. Dead easy. Search search Google for the Pattern site. That's a website that the guy Bulkowski, the father of pattern technical, he's not the father, but he's the guy that wrote the book, literally, the encyclopedia of chart patterns. So search the Pattern site on Google, and then BARR, BARR, or bump and run pattern, and you'll see all about it. There could be the potential for one of those just here, okay, if we see a bit of a retrace. Now, something to consider over the next 48 hours. But now what I wanted to look to is something that was pointed out to me in the comments a long time ago, with the potential for a cup with handle, a big cup with handle, a big cup with handle. Now, it's a little bit harder to see. I'm guessing the person that pointed this out to me was being a little bit lenient in terms of the lips that we've got on this cup here. But let me just see as well. Nice basin with the price action. By the way, quick pointer or little tip for people: if you're looking at cup with handles and any sort of basin format, any sort of rounding bottom, basin, curvy bottom effort, then of course quite often you do get this sort of erroneous area right in the middle. That so often also goes in line with things like, you know, inverse head and shoulders, etc. Okay, so that's what that volume candles there is all about. But of course, we have that volume signature of one as well. Subsequent to that move, where did we see the prices going down to? The 50% Fibonacci retracement point. The 50% Fibonacci retracement point. Just let me kind of draw this arrow in here. This is where it came down to. That's your target for the handle. So while the lips don't line up perfectly, let's be a little bit tolerant on the guy's idea. By the way, thanks so much to whoever it was that pointed that out to me in the comments, and I'm sorry for not having discussed this sooner, but we're doing it now, right? And it was big time frame stuff that you're talking about. Where does that lead us up to? Let's use this area of support and resistance that I'd already kind of talked about in numerous previous instances to draw in our measured move for us and just kind of look up the way. And where does it take us? Well, right between our two main targets that we've got anyway. What we've been talking about for the last wee while is 1.414 in there at $6.79, and of course the 1.618 in there at $7. So anywhere between sort of the high $6 and the low $7 would be your big target in terms of if we see this have that continuation towards the top side. Cool, nice one, congratulations. By the way, if you got any value from this episode and you've not seen one of my shows before, where have you been? I'm the original OG Tezos technical analysis guy on YouTube. Anyway, whatever. Anyway, still, where have you been? Hit that subscribe button, come back and see us again. And by the way, all that chat that's been going on throughout this show, that's right, this is a live show that I'm doing right now. I actually make these clips for saying is that there's educational material here, and it's all really good to no. This is not snappy enough. Let me do that again. None of that was financial advice, by the way, people. I'm not a financial advisor. Always do your own research. None of that was tax, insurance, trading, money, financial. None of it. No advice. Not advice. There is educational content here, okay? And I really try to help you. I empower you, the individual. Now, I will not show you my trades because I think it's unethical. Also, I think it probably breaks several rules on the old YouTube and American law as well, probably. As well, moreover, I don't think that sort of thing is useful. Instead, what I try to do is really help you make your own mind up about things, and to help you do that research, and to help you do that, you know, to be your own financial advisor. I'm just a spirit guide, and I really thank you for tuning in for that episode.